Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for the segment, we have Mark Sebastian, Chief Operating Officer at Option Pit, to discuss trends in the Nasdaq-100, the Nasdaq-100 Volatility Index, or what we call VOLQ. We're also going to take a look at the high beta trade and why it also happens to be the high pain trade. Mark, it's great to see you as always. Welcome back to Trade Talks, and let's talk about some of the higher level trends that you've been watching in the Nasdaq-100, because October had a couple of green days in there, but it's proven to be just as volatile as September was.
Yeah, I mean, so let's starting with the Nasdaq-100. It's basically been the tale of 99 stocks and Apple. The Nasdaq-100 has kind of broken its June lows. The only stock that really hasn't, Apple. Apple continues to show some strength. If we're really going to fall apart, Apple has to be the last shoe to drop. It seems as money is leaving a lot of the other stocks in the Nasdaq-100, they pour a lot of those dollars into Apple, going for safety and the dividend. So if the market is going to crack, Apple is going to be the fruit that cracks it, if you will.
Anything you can see with trends in the Nasdaq-100 Volatility Index, VOLQ, and does it suggest that we're going to see more of this chop ahead? I mean, we have to get through earnings, right? No one's expecting anything superior out of that. And of course, we have midterm elections.
Yeah, well, what I will say is that ahead of CPI this week, the Nasdaq-100 today broke a new 3-month high and was starting to approach some of the highs that we saw over the last 6 months. It's trading all the way up at around 37%. That is a really high number. That implies about 2.33% movement a day in the QQQ, and just a clear sign that volatility is high and traders are worried ahead of CPI and PPI this week.
Yeah, well, I mean, Mark, until we stop seeing these 1%, 2%, 3% moves, whether it's a Nasdaq-100 or one of the other indexes, whether it's on one day to the next or even intra-session, it really feels hard to establish a longer term trend. And that's why I'm going to talk to you about the high beta trade, right? And we know that is bringing on a lot of high paid traders who are trying to kind of pick and choose their spots here. Explain to us in more detail what you're looking at when it comes to high beta and why it has been painful for traders.
Well, high beta has the most exposure to interest rates. Why? Because they have to borrow money, they have the most debt, and because of that, when interest rates go up, it tends to pound on their equity. That affects their equity to debt ratios, and that starts to raise their interest rates. That's where you can enter this loop where a lot of companies' borrowing costs start to explode. We're seeing a ton of pain in big NASDAQ names, really active NASDAQ names that are taking it on the chin, names like ChargePoint, Nikola, Laser. All the EV names are really taking on the chin today as interest rates are moving higher. At a couple of points, the Dow was up, the Russell 2000 was up, and the Nasdaq-100 was still down because of the pain. And that's another reason why a name like Apple seems to be that safe haven, a lot of cash on the books, great debt to equity ratios. So they don't have a lot of these borrowing issues that high beta does. So you're seeing money move out of your ARKs and into names like Apple.
Right. So, Mark, let's talk strategy a bit here. If you're a longer term investor, perhaps it can be argued that there's some great values out there right now as valuations have retracted. But if you think about it more through the day trading, swing trading lens, how are you advising traders? Is it more of a scalping kind of play? Because it seems really challenging to keep any significant position on hold overnight.
Yeah, momentum is really takes place in 2, 3, and 4 day increments. If we have a strong bull day, there's a good chance you're going to get 1 or 2 to follow. The market's range has been 3,600 to 3,800 over the last couple of days for the S&P, and within that range, you want to play the market down when we get toward the top of the range, and you want to play the market going up when we get toward the bottom. Right now, the Nasdaq-100 has broken this morning its June lows. And so you have to ask yourself whether this is an area where things truly break, or if we're going to see some buying here. This is a very intriguing spot with CPI coming in. If CPI comes in line or a little bit soft, it could set off a monumental short pop back to 300 for the NASDAQ. But if that number comes in hot, that's where we start making a run at some of the other levels that I've been watching. I think when all is said and done, we could take a run at the pre-pandemic low high. So right before the pandemic selling, which would put us right around 235. And from there, you're talking sub 200. I don't know that we get there, but if I'm looking at the Qs, I'd be looking at my kind of where I really want to start accumulating triple Qs at around 235.
All right, Mark, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.